Okay, good morning, class. Uh, we are going to look at business. This is under financial accounting. So, uh, business is a word that is being used in different contexts, and it is used to describe economic process and also describe entities that participate in that process. There is no single definition of business, but we are going to look at one according to ICANN. ICANN defined business as an economic system where goods and services are exchanged for one another or for money. This good is an economic system where goods or services are exchanged for one another or for money. So any economic system where you exchange goods for goods, this is what we call trade by barter, or you exchange goods for money, is known as business. Then we are going to look at some features of business. Business has some features. One is business exists to make profits. Is one. Number two, businesses make profit by supplying goods or services to other. This is supply of goods or services. Is number two. Number three, the goods supplied or service. The goods might be make the supplier, that is, you supply goods or services, then those goods you supply, you can either make them or you buy them. This one, like let's say you are into business and you are a producer. You produce product A. Then you as a producer, you can sell your good direct to the final consumer, or you can sell your good to wholesaler, and this wholesaler will now sell it to the final consumers. So in this case, if this producer sells his goods to final consumer, you see he's the one that make these goods. If he sell to the wholesaler and the wholesaler now sell to final consumer, you see this wholesaler is into the business, but he did not make the goods. He purchased these goods from this producer and resell to final consumer. That is what this is trying to explain. Then number four, the risks, because if you are into business, you have to accept the risks, and that risk, what is the reward for that risk is what is profit. For accepting risks, you have to get something in return. What are you going to get in returns? It must be profit, because now you are into business. Let's assume you are selling banana. You bought 100 pieces of bananas. What will happen? There is possibility that you will not sell everything. Let's assume you can only sell, let's say, 80 pieces of these bananas. What will happen to the 20? at the end of the day, you have to dispose these 20 if you could not sell them. So you have to dispose them. What will happen? You cannot sell these 20. So that is the risk we are talking about. So for you accepting this risk of disposing these 20 pieces, what will now be your benefit in return is profit. The number 5 is the profit generated in this business belong to the owners of the business. Can be owner or owners. It depends on the type of business you are into. So the profit or risk is now belongs to the owner of that business. That is that. Then now we are now going to look at the types of business entities. Types of business entity. We have 3 main types of business entities. We have one is sole proprietorship. We have number 2, which is partnership. Number 3, we have a company, which is known as limited liability company. Limited liability company. These are the 3 main types of business entities we have. Thank you.